Welcome to the ePayments Network presentation on credit card processing rates and fees. Have you looked at your merchant statement and asked yourself, what are my rates and fees? Are you confused about credit card rates and fees? Well, this presentation will help you to understand how you are being billed and whether you are getting the best rate without relying on what a salesperson says. Let's start with understanding the process of how credit cards are accepted. The process typically starts with a consumer presenting a credit card for payment of products or services purchased. Over the counter in person, over the telephone, or over the internet. Once the credit card has been entered or swiped by the merchant, it travels through secure communications to the processor. The processor sends it to Interchange. Interchange routes it through the appropriate card association or bank network to the consumer's bank for authorization. Authorization or decline is then returned to the merchant. The consumer signs a sales slip and the purchase is completed. When the merchant closes out at the end of the day's authorizations are sent to the processor. Visa, MasterCard, and Discover rates and fees are determined by Interchange for each transaction. On the next banking day, funds are transferred through the ACH network from the consumer's bank to the processor and from the processor to the merchant. All of the fees on your merchant statement come from Interchange, the card issuing banks, and your processor. The fees from Interchange vary according to several factors, but are the same for everyone. Dues and assessments are fixed at one set rate by the card issuing banks, currently less than 0.1%, and the same for everyone. Only the processor fees vary between processors and their ISOs. Choosing the right processor and ISO can reduce your fees close to Interchange plus dues and assessments. Interchange fees are the fees the card associations require merchants to pay to the card issuing banks for accepting their cards. Interchange fees vary according to several factors with over 100 rate categories. Even so, the fees are still the same for everyone. Let's examine how interchange fees vary. One of the factors used in determining interchange fees by the card associations is the type of card used. Business or commercial cards have higher rates than personal cards. Rewards cards have higher rates than plain cards, and some reward cards, such as airline miles, have even higher rates. You don't expect the airlines, banks, or card associations to pay for your travel, do you? Interchange fees are also determined on how the card is accepted. Internet purchases, because of fraud, generate the highest rate. Motor rates may be less, but a better rate is achieved when risk is reduced, and that occurs when the cardholder is present, and the card is key entered or, for the best possible rate, swiped through the terminal. Fees are also determined by the type of merchant. Examples are restaurants, hotels, utilities, and others. So far, we've learned that interchange rates are the same for everyone, and that several factors determine what the rate is for any transaction. The type of card used, how the card was accepted, and the type of merchant. In combination and along with other factors, there are over 100 rate categories used to determine each transaction's rate. Processors have a host of fees. Some are fixed monthly fees, such as a statement fee or account on file fee. Other fees are tied to transactions, such as capture and authorization fee, and for many the very confusing discount fee. We all pretty much understand monthly fees. They are what they are and self-explanatory. Capture and authorization fee is a fee charged to capture the credit card, as we saw earlier, and send it through interchange for authorization from the issuing bank, and that fee is fixed, as are many other incidental fees. So let's cut to the chase and examine the often misunderstood discount fee. The discount fee is the fee that processors mark up from interchange, which includes dues and assessments. There are typically three methods used for marking up the rate: tiered pricing, often called bucket pricing, surcharges, and cost plus. Let's examine each pricing method. I'm sure you've heard a sales rep claim that he can get you some ridiculously low discount rate. What he didn't tell you is that the rate is based on qualifying transactions, and that most transactions, if not all, will down qualify into higher discount tier group. Miss the tier by a basis point, your discount rate goes to the next higher tier. A deviously smart sales organization can group the more than 100 interchange rate categories into 3 or more tiers in such a manner that transactions will down qualify to the next higher tier rate. Surcharging is a method of adding a percentage increase to interchange based on categories of merchant type and type of transaction. By determining the surcharge based on these categories, processors are able to assign fees based on risk to the processor. Although better than tiered pricing, surcharges can add up to 1.75% or more to interchange rates. Cost plus is an accepted method of marking up products and services in business. This is the rate structure that government and large businesses have always enjoyed. ePayments Network now offers cost-plus rates to all of its clients, effectively leveling the playing field for small and medium-sized business. Honest and fair, with average markup of only 1/4%, ePayments Network beats tiered pricing and surcharges, hands down. Call us now, 800-417-0434, and ask us how much we can save you.